And our top story on World Business Watch. Stocks on Wall Street took a break in the last session of 2023 following a surge that brought the market close to all-time highs. Global equities snapped a 5-day run-up on Friday, the final session before the New Year weekend. There are now indications of fatigue, suggesting a halt or retreat. This follows a run-up that has outperformed expectations despite uncertainties about the Federal Reserve, recession fears and also geopolitical landscapes that we are witnessing in the world right now. Still, for bulls defying all doomsday scenarios, the S&P 500 closed just shy of its record high. The S&P 500 also recorded its greatest weekly surge since 2004, fueled by the AI boom and the fear of missing out of FOMO. The S&P 500 soared 24% in 2023, while the Nasdaq 100 had its best year since 1999. Shares around the world have risen sharply in the last 2 months, with MSCI's World Share Index posting a 20% gain, its best in 4 years. European shares ended 2023 with an annual gain of almost 13% to mark the best year since 2021. India's stock benchmarks recorded their second best year since 2017 and were among the top global performers. With markets expecting the US Fed to start rate cuts in March, Indian markets are seen rallying in 2024 on continued foreign fund inflows. However, the Chinese markets underperformed in 2023. Other emerging markets ended 2023 with the best gains in years. After a year of massive swings and numerous head fakes, US Treasury yields ended 2023 pretty close to where they began. The dollar was little change on Friday but posted its worst year since 2020. Oil prices also closed 10% lower in 2023 after a year of wild swings driven by geopolitical concerns, production cuts and global measures to rein in inflation. Nickel was the year's biggest metals loser, while copper managed a small gain. Gold prices ticked lower on Friday to $2,000 an ounce, but managed to mark the best year since 2020 on Fed rate cut bets. And now for more on the markets, we are now being joined by Dr. Vikas Singh. Dr. Singh is a senior economist and columnist and TEDx speaker, and he's joining us live from Hyderabad. Thank you so much for joining us on WION, Dr. Singh, and welcome to the broadcast.
Thank you so much for having me here.
Right, and Dr. Singh, my first question to you is that will the stellar run that we've seen in 2023 in global markets, will that continue in 2024 as well?
It's likely to continue for the next couple of years. I think we are at the beginning of the bull market, but our viewers should also understand that bull markets are never linear. There will be ups and downs, but it's quite certain, knowing what's been happening in the last 6 months or so, that we are at the beginning of the bull run.
Right, Dr. Singh, you talk about we are at the beginning of the bull run, but help us understand as to what are the broad risks for 2024 when it comes to the markets.
So at the global level, there are a couple of big risks. One of the big risks is that I think about 64 countries are going for election in the next 1 year, and we don't know. It's difficult to predict who's going to be in power. Particularly, what's going to happen in the US is going to determine largely what will happen to the global economy. So that's one big risk. The other big risk that most of us can never predict is the geopolitical risk. Russia and Ukraine war has been factored in, but what's not been factored in is what happened between Hamas and Israel. So hopefully we're going to have a very peaceful time. So that's a couple of risks that we must factor in. The third risk, and maybe that will benefit India, is what's going to happen in China. The good days of China is certainly over. China is not going to grow at 6%, 7% that they are accustomed to. Their growth will be limited. So in that sense, the global economy is not likely to grow more than 2 or 3%. However, the risk of recession is more or less factored in. It's not going to. It's unlikely that we're going to have a recession, global recession in the next year or so.
Right, Dr. Singh, you speak of how the ongoing two wars, the Israel-Hamas war and the Ukraine-Russia war, they will impact the markets, and you speak of recession as well. My last question to you is just a follow-up. There are the markets underestimating the economic risks for 2024?
I think the market is ahead of us. Market knows it's not underestimating. It's factoring in the risk. But I think the market also knows that these kind of things are taken into account. The market also understands that, particularly the Indian market understands that the situation in India is pretty stable. The election victory of the BJP in the three states has given a huge fillip to the investors. They now are factoring in Modi government coming back to power, which means political stability. They also know that India's demography is very, very strong. The consumption, which is the growth engine, is firing at full throttle. So in every sense, the risk is factored in because the opportunities that India presents is much larger than the risk, that the global risk. The other thing that the Indian economy is factoring in, and which is good, which is a tailwind, is that the China degrowth is going to help the economy because our export can go up. The FI's money will come back to India. I think 2024 will be the year where we'll probably have the highest amount of money, foreign investment coming into this country. So I think it's going to be a good 2024. A word of caution to the retail investors would be that they must understand that the growth is not going to be linear. They must be cautious about where to invest. They must have lower expectation. The expectation should not be more than 12 to 15%. If they're lucky, they can probably go to about 20%.
Right.
But my only feeling is that retail investors should not see the market as a lottery or a casino. They should caution judgment, and I think they will be rewarded well if they choose well.
Right, Dr. Singh. Let's hope that 2024 is good for the markets. But thanks very much for joining us in WION and sharing insights with us.
Thank you so much. Happy New Year to everybody.
You too.